Good evening, guys. How's everyone doing? How was your weekend? Not sure what you're talking about there out on bail. The stream was set up for 8. It's 8 o'clock now, so not sure what you're talking about. How is the audio? Is it clear? Do we have some echo? How's that going? Perfect. So, those of you who are in the course or you trade yourself, how was your week? What kind of percentages are you running for the week? How is your month going? It's been an incredible month for Forex. Cryptocurrency's been selling a little bit, but it's been an incredible month for Forex. So how is everybody doing in their trading? How is your percentage? How are you doing? I'd be interested to see and hear some of your results. Negative 90%. That's kind of been the state of crypto since January. It's not been, there have been some moves up, but it's not been very sustained. So appreciate that, Wacko. 33% on Bitcoin, nice. It's definitely, when it does move, it moves quite a bit. And so if you are able to margin trade Bitcoin, you can capitalize on these moves and really take advantage of it because the moves are very big. You can make a lot of percentage. 5%, nice. Just got the course, welcome. Break even but not trading much. Hey, break even is better than at a loss. It's much better to be at break even and learning, having those breakthroughs, really progressing, than trying to trade too much. Did the course in 3 days. Excellent. Actual trading is hard. It is hard. There are a lot of people that will try and sell you something, tell you it's very easy. Trading is not easy. If it was easy, everybody would do it, right? It's very simple, and it's not as complicated as people say it is, but it's not easy, and it does require a level of skill. Once I started using your strategies, up about 30%. That's awesome. Love hearing that. You're not late, see? We're just getting started here. We're kind of just doing some introductions, letting people get in the room here, and then we'll get started. Patience, definitely. You can work full-time and trade. It does make it a little bit more difficult, but you can do it because the market gives us time before it actually commits, right? So it'll give us indication, it'll give us the pattern, it'll give us the structure before it actually commits to the trade. And so if you can set aside a little bit of time every 3 to 4 hours to check the charts, you can be successful and profitable. Oh, gotcha. 33% successful trades. Hey, your win rate and your strike rate improves as time goes on, as your skill gets better. Coming straight out of the gate, it's natural and it's completely normal to have a slightly lower win rate because you're learning this. This is very much a skill that you're going to develop and have for the rest of your life. And so it's something you have to put time into, really develop that. One of the things I want to show tonight here is backtesting. I've been backtesting Bitcoin here quite a bit. It's been very interesting, the results that I have been getting. I'm putting together some data and I'm going to release that to the community here when I get it done. But it's incredibly crucial if you're brand new to the market to backtest. Now, backtesting changes based on what strategy you're trading. And I wanted to take a few minutes and actually show you how I do backtest. So stick around. After we get done with Bitcoin, get done with some analysis, we're going to show you backtesting, how we do it, how you can take advantage of it to really develop your skill, so you don't have to spend years on the charts to really develop your skill, you can use backtesting to speed up that process. So we're going to show you that here after we get done with Bitcoin. But let's get right into Bitcoin here. It's been a few minutes. I believe everybody is in the room. We'll start out with Bitcoin here. Let me switch over to my secondary monitor. Give that a minute to come on. There we go. All right, so with Bitcoin, we're kind of still trading the same strategy, or not strategy, the same pattern rather, the same structure. It's kind of been in this structure for a long period of time, especially on the weekly here. We've been in this structure. It's been range trading for a bit here in this piece here. But if you just look at it, what it looks like on the weekly chart, we had a couple weeks, 2 weeks of straight selling. The market is simply taking a break at this point. And so this is where you expect to see a new pattern develop. This is where you expect to see the market give you the indication of what is coming next. Yes, Michael, there is sound. I'm not sure if it's just on your end, but a couple other people said sound is good. So just double check on that. How is the sound? Is it clear? Or is there an echo? Or is anybody else not getting sound? Perfect. All right, so Michael, maybe you want to refresh the page. He probably won't hear that if he's not going to have sound. But all right, so on Bitcoin, this is the weekly chart. This is the structure. Jumping down to the daily, this is where we can actually see what we're getting to trade. And it's where you can really see very clearly what is coming next. It's quite clear at this stage what the pattern is giving us. From here, we either get a sell from where we're at, or we move up a little bit higher, then get the sell. But judging by just what we have here with the pattern, we're going to get that sell. The reason being is just take a look at where we came from, right? This is very high momentum, right? There's a lot of volume in this run. This is very impulsive. And so following up that impulsive run, we have this pattern here. And it's an ascending pattern. That is a very key point to know. It's an ascending pattern followed up after an impulsive move down. So if you look at what we had previously and what we were trading previously within this bigger structure, we had this pattern here. And it's not quite as big as the pattern we're trading right now, but it's very similar in that it's an ascending pattern after an impulsive move down with momentum. Followed that up, we got a sell straight out of that pattern. That is what you would expect to see based on the nature of this pattern. This here is very simply just a bear flag continuation. We had an impulsive move down, a correction, it's a bear flag continuation. Now, because we are in this area, this structure is here. It is possible that we get the sell out of this pattern and it moves down, moves back up a little bit, gives us more of a descending pattern. If we do get that, it's going to be more likely to see this reverse, and maybe we'll go back up, tag the trend line again, but we'll address that when we do get there. But just trading what we have currently, this is the move down, very clear correction at this point. So if we jump down to a lower time frame, this is the 4-hour chart. And again, it's very clear. The pattern has evolved a bit, right? So if you've watched our videos, you know that we were looking at this expanding type formation we were looking at that. Then the pattern changed. The market gave us a clearer indication of what is going on, and we got this ascending channel. So with this ascending channel, we know the direction. We're going to get a sell out of this pattern. That is how the market does run. But what we don't know is how long this pattern is going to play out, when that sell is going to happen precisely at this point. Because it is possible that we trade in this range, in this ascending channel, for a decent amount of time. Nobody knows for sure how long it's going to take for this to play out and when it's going to actually sell. So keep that in mind. But jumping down to the 1 hour, there's a couple things I wanted to show you here. It's very interesting. If you look at the pattern we're starting to get, it's starting to look more like a continuation to the upside, right? So if you look at this as the move up, we got a small ascending channel within this. It sold. Now we're getting a move back to the upside. It's kind of ascending in nature. But within that, we're starting to get this pattern here. Now, this pattern has to be understood in context. Whenever you're looking at a pattern, you would expect this to be a continuation, right? But if you look at it in context, you see it in context of the pattern. Where did it come from? We know that we have corrective movement. We know that we're in this corrective period for Bitcoin. So where did it come from? This pattern here came from this corrective movement here. So we had some ascending movement that was corrective. We broke to the upside a bit and created this pattern. If this is going to be the continuation that breaks and goes to all-time highs, let's say, it's not going to come from corrective nature like this, right? And it's not going to be inside of a corrective pattern that is ascending. So, just looking at what we have right now. Ascending channel, right? Sold off from there. We got to move back up. It's starting to just form another ascending channel. And so what I would look at here is the potential that this continues in this ascending channel. That would give us a very good indication this is coming back to the downside. The other thing that I would look at for Bitcoin and I would be aware of is the potential that this could move to the upside short term. So what do I mean by that? This could just correctively move up to here, break out impulsively, maybe even give us a smaller continuation, come up to this trend line here, get rejected there, and then we see that sell. Why is that still possible? Well, that's possible because we know the pattern we're trading. It's an ascending channel. We've already had 2 touches here at the top. It's possible we come up for a 3rd touch in this area. We would compound that if we do get there with corrective nature. Maybe we get a smaller ascending channel, maybe something more like this. Let me show you this. Maybe we get something more like this, right? We come up to the trend line, then we see this kind of a reaction. We have an impulse up, a candle that retraces that entire move. That's what I would be looking at to see this get rejected at a 3rd touch there. So that is one of the scenarios I'm looking at for Bitcoin. It's starting to give us this pattern, and it's starting to look more like a continuation. But we have to be aware that it's possible this is a very short-term buy, if it is a buy at all. The reason why I say if it is a buy at all is if you look at the nature we have, it's very possible that the market just gives us this ascending channel within the bigger ascending channel, which would give us even more of an indication that we'll see that sell. And so that's kind of what I'm looking at for the short term for Bitcoin. We may get a short term buy, but understanding that the bigger pattern is a sell, it is a continuation that came from an impulsive move to the downside. Based on that knowledge, that this is the corrective period after an impulsive move to the downside, what I'm looking at is the fulfillment of that pattern, the continuation of this move. Now, one thing that should be noted is what would happen if this broke to the upside? What would we look at to see this break to the upside? We talked about it a little bit a couple minutes ago, but the market is going to give us some sort of indication. It's going to give us some sort of descending channel out of this pattern. So if this pattern does get fulfilled, and let's say it goes all the way to the top here, we get that third touch, then we see the sell. To see this move back up, and outer structure is down in this area about 5,200. If we do get the sell out of this pattern, I would be looking down at 5,200, that area, to see a reaction, to see if we get a reaction in that area. But to see a move back up, simply based on the pattern, we're going to get the sell anyways. And if we do get the sell, to get a move back up, we're going to see more of a descending channel. How big that is, nobody knows, but it's going to give us that indication. And so this pattern here will just become part of a bigger structure. The market will give us that indication, but as of right now, it's looking very, very clear for just a continuation to the downside. So taking the short out of this pattern, a couple targets that you should be aware of. Whenever you're looking at a pattern like this, and you're taking a short, you want to be aware when price reaches the beginning of the pattern. So the beginning of the pattern here is about 5,900. So right around 5,900, if you're in a short, you catch the short, you want to be aware when it reaches right around 5,900. Just looking back in the chart, we know that there has been some contention over this level. There is some fear if we do break it. You know, you can see that just by the way price has interacted with it. So it is kind of unknown what will happen if this does get broken, this 5,900 level. But I think it's very likely if we do see the completion of this pattern, we get the sell. It's very likely we break the 5,900 area, go all the way to outer structure as a minimum, and that would be right around 5,200, and then we'd address it there to see if we get any setup for a buy. But just trading what we have right now, this pattern is a sell. If shorts get squeezed, do you have your buy order set? Now, with short squeezes and long squeezes, sometimes you can predict that based on the chart, right? So you can look at the pattern, and a lot of times leading up to it, and let me just show you here on the chart what happened leading up to this move to the upside, which, by the way, we did a video on this. Very clear manipulation. This is not a natural move to the upside. But even though it wasn't a natural move to the upside, I do want to highlight what the market did give us, because it's a pattern that develops when we have low volume, when there is a level of indecision in the market. And so we had this pattern here, right? So if you zoom out a little bit, let me just draw this all the way back to here so you can see it very clearly, where the corrective period within this impulsive period, you know, and this is all within a big corrective period. But I did want to show you this. So we see this more of an impulsive move up, right? It comes all the way back down, creates this correction, and then it breaks to the upside. This obviously was clear manipulation, right? Definitely, no question, that is manipulation. But leading up to it, again, we have a move up. This is simply the correction, the continuation. And then right here on the trend line, we get this flag type pattern that breaks to the upside. So we have a move up, a bull flag continuation, and then the move back up. So this is very clear manipulation, obviously, but the market gave us that indication. Why? Because volume was low, participation in the market was low, sentiment is low, there's not a whole lot of decided action. And whenever you have a period like this, it becomes very easy to manipulate the market, very easy to push prices. And so if you're looking at long squeezes and short squeezes, I would simply be aware of what the pattern gives you, what structure gives you. And 9 times out of 10, the market is going to give you that indication beforehand, simply because during these periods, you have low participation. Yes, that was when BitMEX went down. So they closed their trading, and then that happened. So take it for what it is. So yes, leverage, it's about 50 to 1. That's about, I believe that's what the US allows for Forex brokerages. For crypto exchanges, it can be different, but for Oanda, the broker I'm on, it's 50 to 1. Forex.com, it is the same as well. So that is something to be aware of. The other thing that I thought was worth mentioning is if you follow the strategy, maybe you've been through the course, maybe you would have been looking at this pattern here. And let me turn on replay here so I can show you exactly where we would be. So maybe you're looking at this pattern here, and we were looking at this. It's giving us more of an ascending pattern, right? So we have the rejection from this manipulation, a strong move down, goes straight into corrective movement in an ascending channel. You would expect that to break to the downside, right? But if you play it out, it moves to the upside slightly. Let me speed this up. So it moves to the upside just slightly. We start to get this ascending channel within here. We see this sell, and it creates this bigger pattern. So if you're looking for a sell in this period here, it's not that your analysis is wrong, but you have to understand that this is still within the corrective period. This is still within the pattern. And as long as we're in the pattern, it's possible that the market moves back up. It gives us a bigger pattern. Maybe we get more of this ascending here. It gives us a bigger pattern. We still get the sell, but the pattern gets bigger simply because we are in that corrective period. If this was below the pattern, if we broke out of the pattern, broke it impulsively, then we got the same pattern, this same structure below, then that would change. Then you would be looking at a clear break of the pattern and then a new structure. But all of this is within existing structure. And so that's important to keep in mind as you are trading this. And here we're kind of at the halfway mark. When you're at the halfway mark within a pattern, you can see price do some erratic things. And this is where we could either see the sell, simply based on the fact that we are getting more of an ascending movement, or we could see a short-term buy up to here, up to about 7,000, and then see the rejection off of that. Any recommended exchanges for Bitcoin, not BitMEX? It's really tough. If you want to simply buy and sell Bitcoin, I would recommend Coinbase and Bitstamp. If you want to margin trade Bitcoin, it is really tough. So I know quite a few guys in the community are using one broker and one Fox for Bitcoin trading. The problem with that is the spreads are quite high because volume is really low on that exchange, simply because they don't have participation yet. It's kind of new. And so there aren't a lot of good options for margin trading Bitcoin at this stage, simply because the legit exchanges are waiting to really put their money behind it, put their name behind it. I know Forex.com was talking, and I actually talked to a representative from Forex.com, and he said that they are looking into adding Bitcoin to their brokerage. But the problem is, and why you won't see it, let's say, in the next couple weeks for the US market. The reason why you won't see that is because there's a ton of manipulation going on. And until that gets quelled, you're not going to see brokerages such as Forex.com throw their hat in the ring and start adding Bitcoin, because they got to put their name behind it. And, you know, it's something they've got to back. Sure, Daniel. Could definitely look at XRP here. Is Bitcoin making sense? Does this make sense? Are there any questions related to Bitcoin here before we move on? Is there anything that isn't clear that I've covered, or something maybe you want me to cover related to Bitcoin in the chart we're looking at here? Want to make sure I don't leave anybody out, but I don't want to belabor this if it's clear and you see it for what it is. So with Kraken, I'm not a huge fan of Kraken simply because of some of the sketchy things I've seen with in the news that they've done, some of just sketchy things I've seen with them. So I'm not a huge fan of Kraken. Poloniex, I can't trade because I'm in New York, so I don't know much about that. Perfect. Yeah, I mean, BitMEX really is making millions, and they're making literally millions of dollars off manipulating the market. And there are some theories based on why they're doing this, but just looking at the pure numbers, they're making millions of dollars on this. But that is why you're going to see it, and that's why you're not really going to see them stop, because it's very lucrative for them. Chart is clear, but I'm unsure where to exactly place buys and sells. That's a good question. Let me quickly cover some scenarios here. Targets, Truth Blitz. I'll cover targets here in a minute. So getting in on a trade. Within this pattern here, I'll just be honest, it's going to be a little bit tougher to find a decent entry. The reason for that is this can just continue to move in this ascending channel, right? And we still get the sell, but it continues to go up and up and up. So how would you actually get in on this trade? So if we do get a third touch here at the top, it's going to be very, very clear. All I'm looking for to get involved in a trade like that is a very similar pattern to what we had here. So if we get there, we get any sort of ascending nature. Combining that, if we get any sort of rejection there, so if we get an impulse up, maybe a high test candle, a doji type candle, and then we get this retracement candle. We get a candle that retraces the entirety of the last impulsive candle to the upside. That is where I'd look to place an entry. So if we look at just where our entry would have been for this pattern here, give us a little bit of an indication. So with a stop there, let me move this over and show you what you'd be looking at. So it's impossible to know how big the candle is going to be, what we're going to get. But let's use this as an example, stop placement for what we had before. Just show you what we do have. So getting in on that, I'd simply be looking for a very similar pattern to sell if you are able to sell. And then I'd be targeting the beginning of the correction. That there is about 9% with a fairly large stop. The stop loss there, it's big enough to compensate for quite a bit of volatility, and it's big enough to compensate for a large retracement candle if we do get that. So that's how I'd be looking to get in on a trade at this level. Where we are currently, I'm not looking to get in on a trade. So I wouldn't be too keen on jumping in just here currently. I'd be looking for the market to give me a little bit clearer of a setup. So what do I mean by that? If we sell straight from here and maybe we move up a little bit higher, we still get that ascending channel, and then we sell. All I'm looking for to get into this trade is just a correction to confirm that, and then a move down. And I'd be looking to get in on the break. Depending on how big it is, I'd be looking to get in on the break or at the top. But if it is more or less that size, I'd be looking to get in there. Because my stop is smaller, and it really depends on where that develops, I'm just giving you an example here. You're looking at about 11% in that trade. And again, the risk reward numbers we're looking at here, 11%, that's with only putting 1% of your account on the stop. So you're only risking 1% of your total account balance with the stop loss. So worst case scenario, you only lose 1% of your account balance. We found that that really reduces your emotion, and it allows for you to make mistakes, or it allows for volatility, allows for maybe your analysis right, but you're a little bit early. It allows for that. We're looking at 11% if we get that kind of structure. So to get in on a trade here, I'm looking for the market to either give us that sell and then a continuation pattern, a bear flag to confirm that within this pattern, or we go all the way up to about 7,000 and we see a rejection there, very similar to what it looked like in the past. So as far as targets, I did want to cover this quickly. Targets, we're looking at about 5,900. That's the beginning of the correction. Whenever you're looking at a pattern like this, it's ascending or descending, you want to be looking at the beginning of the correction for a potential reaction. That's about 5,900. It's very likely if we do get the sell out of this pattern, we'll break it this time. If we break 5,900, we're looking right around $5,200. Depends on when we get there, but between $5,000 and $5,300 is going to be the area that we're looking at to see a reaction, to watch for a reaction. Doesn't mean we're going to see that reaction. We just have to be aware that we could, simply based on what we've seen in the past with the structure. How do you play the breakdown? I usually end up chasing the red candle, and it's too late because a lot of these moves are quick. That is very true. So I wouldn't chase a green candle or a red candle. Like I said, let's just remove these lines here. So you can look at just the ascending pattern, and maybe that's a little bit clearer for you. You can see here we had the sell. This is just another ascending pattern to potentially see the sell. If we do get more of just corrective nature here on the trend line and it becomes clear, we start to get this ascending and the pattern gets really, really tight, you could set an entry on the break. You know, that would be perfectly valid to set an entry here. Put your stop above, you know, wherever the price action is to get in on this trade. So if it breaks, you're tagged in. The downside and the risk in that is because we've seen volatility in the past, because there are some wash trading scenarios going on, it's possible that we see a candle like this where the market attempts to move down, it gets rejected, it moves back up, gets rejected. We see this big doji type candle. That is the risk, right? And that's why you only want to risk 1% of your account, because you don't know that that is going to happen. This is Bitcoin. It is possible to get that scenario. But that is very valid to take that there if we do get a very tight pattern. If we don't, I'd simply be looking for a continuation. If we do get the sell, simply looking for a continuation to confirm that move to then get in on the account, to then get in on the trade. Any good exchange with leverage? So we covered that a little bit. There really aren't a lot of good leveraged exchanges for margin trading if you don't want to risk your money. And BitMEX is a scam, very clearly. Bitfinex, a lot of shady things going on there as well. So you can use onefox.com. Volume is very low. Spreads are high. So at this point, we just don't have a lot of good options. Is it legit to slice through the wick when drawing a pattern? So with drawing patterns. Typically, and what I found is drawing straight to the wick is going to give you the truest form of the pattern. Occasionally, very occasionally, you will get extreme levels of manipulation. When you get extreme levels of manipulation, you get some very obvious manipulated times. You can cut that off, and if it's in the middle of the pattern, you can cut that off. It's obviously not what the market is responding to, and we have seen that in the past. But typically, even in this scenario here, where we did get more of a manipulated move, I'd still be looking at that as the pattern, because this is very likely what the market is going to be responding to. If you do cut it off, and maybe you go down to here, you can see you're going straight through price anyways. So I'm looking at that as the pattern. Unless it's, let's say, we got an extreme amount of volatility, it goes all the way down to here, then completely moves back up, right? I'd be looking to disregard that and just look at price action. But most of the time, draw it to the wick. It's going to be a lot clearer, more accurate. What do you mean larger spread due to lower volume? Whenever there is less volume on an exchange, what happens is you set a buy order or a sell order, and there's not enough liquidity in the books for that to get filled at the price you select. And so what happens is it runs down through the book until it finds a comparable size buy or sell, depending on what you're doing, to sell into or buy into. And sometimes if the volume is very low, that can be $60 in the case of Bitcoin, $60 to $100 below or above your entry, simply because the exchange had to run through the book to find an order to actually fill yours. So that's what I'm talking about there. So wash trading, for the most part, it's usually a bot of some kind. Do you use fibs? We do, and most of the time it's for targets. So most of the time, if I'm going to use Fibonacci, it's going to be as a target for a reflection point. I don't use it all that much, to be honest with you. In day-to-day trading, I'm not going to have it on very much, simply because the majority of the time, the chart and price action is going to give me everything I need to know. Occasionally it is helpful, and I will use it. So I hope that's clear. So I'm going to jump into XRP here. I haven't looked at XRP in a while, but I do want to cover it for you guys. So let's look at the weekly chart. So let me evolve this a little bit. I haven't looked at this in a while. All right, so you can see the structure is very, very similar to what we've showed in the past. Not a lot has changed. I don't think you're going to see XRP just turn around and maybe move to all-time highs if Bitcoin is on the downtrend or if Bitcoin is developing a pattern. It is what it is. They are kind of correlated. But if we look at the daily chart, you can see a very similar scenario. It's slightly different, and you can argue we do have more of this ascending channel here. It's moving correctively, but it's possible that it just continues to move correctively for a while longer, right? Nobody knows when it's going to actually turn around. And I think that is going to be kind of correlated to what happens with Bitcoin. But looking at it here, it is kind of interesting. So we had the move up, a correction, another move up. Now we're starting to get another correction. And if we look at the pattern the market is giving us, it's more of a pennant. It's more of a pennant type pattern. But it's starting to look more like a continuation, right? Because we had the move up. This would just be more of a pattern to potentially see a continuation. But I would keep in mind that, you know, if we do draw back in this descending channel, which is still very relevant, by the way. Let's go to the 1 hour here so we can really see what's going on. You can see that this descending channel is very relevant and the market is responding to this. And so with this continuation pattern, it may be very short-lived, right? If we do get a buy out of this pattern, it may be very, very short-lived and may only go to the structure here. The other thing that is worth noting, let me remove these lines here so I can just show you just currently what we're getting. It is worth noting that this is there. We had a move down, very clear flag continuation, another move down. This is starting to look to me like a continuation pattern. So we have a move down that is very clear. This is starting to look like just more of a correction to then see the break and another sell. Especially the nature we're getting right here on the trend line. With this pattern here, starting to look like a move down, a correction, another move down, another correction. Very possible that we just get a sell straight out of this pattern. So keep that in mind. Be aware that it is very, very possible that we don't get the buy out of this pattern and this plays out. We actually get the sell. So with XRP, be neutral with it and trade what the market does give you. But as of right now, I'd be looking more for this sell simply because of where Bitcoin is at. I think if we do see the sell on Bitcoin, it's very likely XRP is going to follow suit. So be very aware of that and be very neutral with it. Yeah, Slack group has been amazing. We've really enjoyed the time we've had in there. We try to spend as much time as possible, but you know, we have a lot of things going on. But we do spend a lot of time in there. Tonight I'm going to be posting some Forex charts, some of the scenarios I'm looking at, and really going into detail on that. So keep an eye out for that if you are in the Slack group. So that's XRP. That's what I'd be looking at for that. Zcash. I haven't looked at Zcash in a while. I would assume it's going to be very, very similar. Let me open that up for you. We'll look at Zcash very, very quickly. Let's see. We'll look at it on Bittrex. We'll look at it against Bitcoin. So one of the things that I notice with a lot of altcoins right now, yes, it's a private Slack, Nick. It's for people who have been through the course. And the reason for that is we're trying to really facilitate a community that helps each other. And if you've been through the course, you understand the strategy on a deeper level. It's very easy for you to jump in and say, you know, I've been looking at this and I've been improving my skill here for 3 months, and maybe somebody else has only been doing it for a week or 2 weeks. And you can kind of help each other out. And that's what we've seen a lot in the Slack community. We've seen people helping each other out with suggestions, with analysis, you know, giving some tips based on what they found and sharing results. And it's very inspiring if you're brand new to have that community where people are experiencing success and they're sharing it. And we're really excited about that. So with Zcash, as I was saying, one of the things that you'll notice with a lot of crypto and altcoins in general is it's just corrective movement, right? And you'll see this just move correctively and just trickle its way down. It happens quite a bit, and as such, it doesn't give you a multitude of amazing entries within that. So if you look at it, you can see it works, right? So with this, that would be just a continuation pattern, right? Clear move down, continuation pattern, got the sell out of that. Again, the same thing here, really. we had a correction right here on the trend line, then a pretty decent sell out of that. But you'll notice that it is a lot of selling. Right now, if we look at that as the continuation pattern, it's kind of more of sideways range movement now. It is possible, you know, we are at a level, a lot of these altcoins, where it's quite low. And some of them are just garbage projects, but some of them, they are decent projects. And they're at a level where it's possible that we just trade range bound for a while. So there aren't a ton of good entries here for Zcash at the current point that I'd be willing to jump in and trade. Just looking at what we have here, it's very corrective. It's very much a descending channel. I'd be interested in Zcash up here at a triple top, right? We get here at a triple top, I'd be interested in actually selling that. If you do have the opportunity to do that, that's where I'd be interested in getting in on a trade. But as such, right now, it's not the clearest, it's not the cleanest. There's not a ton of entries to jump in on that. And you notice that's a lot of how it is with a lot of altcoins now.
Nano. A bunch of people want to say Nano.
All right, let's look at Nano then. We'll take a look quickly. We'll look at it against Bitcoin again. All right. So this is one of those times when, you know, obviously we had this descending channel, and we started to get the break to the upside out of it. Now, this is what I'm talking about though, and I'll actually remove these because that is a huge time period. But if you look at, let me zoom out here. Just look at how long we moved in a very corrective way before we actually did get the move to the upside. It took a long time. So from May 4th till August 14th, it's been just a very corrective period for Nano. There haven't been a lot of good, clear entries. There's been a couple, and you could have traded it, but it's taken a very long time to get to a point where we're actually starting to see this break to the upside. So just looking at what we had, we broke to the upside, we got more of a continuation pattern, and we're starting to see that run up. So let's jump down to the 1 hour. Let's look at what we got. So it's been very, very clear actually with the move up. Starting to see continuation there, continuation here. This is looking more and more like we'll get that move back up. The only other scenario that I would be aware of with Nano is the potential that it will give us at some point the rejection and a reversal. So if we look back here at what we had in the past, you can see we're kind of at an area where we've seen a reaction in the past. There's not a lot of highs or lows within this because it's very corrective. But if we jump back here, let me just take a look for you. We're very close to this low here. So we're very close to this low here. And I typically don't go back and look at, let's say, support levels way back in the chart. But this would be an area where I would be aware that it's possible that we move to there and then start to get some sort of reaction and potentially reversal. If this is going to continue to move to the upside, I would expect to see a bigger pattern. So I would expect to see this come back down, maybe give us just a little bit bigger of a pattern, a little bit clearer of a pattern, of a continuation pattern to then take as a buy. I'd be interested in taking that as a buy. As of right now, it's not the clearest pattern, right? So we had a very clear continuation here, but it's starting to look more like an ascending within this. So I'd let the market give us what it's going to give us, and at this stage, if that is just a continuation pattern, I'd be open to trading that. But just let the market develop a little more. And if you're looking at this trend line here, to get a correction all the way down here to the trend line and then the buy off the trend line, that's going to be very, very nice. So is Nano artificially pumped? It is possible. Obviously, that is possible. I haven't looked into it too much. I don't know that to be the case. So I would trade what the chart does give you. Yeah, that is true. Manipulation is clearly happening, but you can use it to your advantage. It's sometimes tough to capitalize on it because a lot of times it catches you off guard. But hey, if you can get in on it and make profit on it, there's nothing wrong in that. What makes you say that is BitMEX that manipulated the price? I would say go watch the video that we released, but very quickly, you should find it at least slightly odd that BitMEX goes down for quote-unquote maintenance. Then we see this ridiculous move in literally seconds while they're under maintenance, while nobody can get in, while nobody can manage their trades, while nobody can cancel their positions. There is evidence to support manipulation, but just looking at that fact, it goes down for maintenance, price pumps. I mean, it's an awful huge coincidence. Plus, BitMEX has the resources to do it. They have the technology, they have the software, they have the liquidity to do it. Well, anyone couldn't have done it. So there are several exchanges that could have done it. For a trader, a single trader to do it, it would be slightly more difficult. You know, it would take quite a bit of liquidity for a trader to move Bitcoin that much. So yeah, we're going to look at some Forex charts here, but I did want to cover a couple. Crypto. Yeah, exactly. It happens, and I believe that is why they do it. You know, if you lock it down, people can't get out of their positions, you obviously make a lot more. So it is what it is. So let's look at some Forex pairs here, and then I want to talk about backtesting, and then we'll do a little bit of a Q&A. So let's look at the DXY. So with the DXY, it is interesting, and I do, if there is ever a index that I would correlate to Forex pairs, it would be the DXY. I don't go in and look at the AXY or any of the other indexes. What I'm interested in is the dollar index and correlating that specifically with euro dollar. Euro dollar has an inverse correlation to the dollar and the DXY. Other dollar related pairs, they can move more independently of the DXY. And so while it is important that you understand what's going on with the DXY, don't not take a trade if the pattern is clear based on what you see with the DXY, because maybe your analysis of the DXY is right, but that pattern fulfills. We get the sell or the buy out of that pattern, and then the DXY gives us what it's going to give us. So don't correlate too much, but do understand what is going on. So very quickly here, we had a ascending channel here with the DXY, a move up. It moved into this ascending channel. Then we're starting to get more of a rejection and a move down. What I would be aware of here on the weekly chart, we had an impulsive move up, more of a high test candle. It's not a perfect high test candle, but then we get a retracement candle. Retraces the entire move of the impulse to the upside. This is on a weekly chart. That is a good indication that we'll start to see more downside. So if we jump down to the daily, it just gets a little bit clearer. So again, we have this ascending channel, clear momentum to the downside, and looking at the 1 hour here, this is where I believe we're starting to see potentially a pattern to drop, or this is an incomplete pattern. So what do I mean by that? Is it possible that this moves like this, comes back to the upside for one more high here in the pattern, then get the sell? So I'd be very, very neutral with this. If we do get the move back up, and that is likely to see that happen, if this is the pattern we're trading. If we do get the move back up, I'd be interested in this area to see more selling and to take advantage of more selling. So within this, I would be very neutral. It's also very close to outer structure. Because of that, I'm also keeping in mind that it's possible we move back up to here and then start to get more of a descending channel to then move back up for another high either here at a double top area, or the other thing that I would be aware of, I have the trend line cut off, right? Just to make it look cleaner. But the pattern here is this. And so if we see a move up, it is possible that we break this trend line. This trend line essentially then means nothing, and this is what the market is responding to. So with this, be aware that we could simply get a more complete pattern, and this could play out as a continuation pattern to the downside, and we either see this reaction here, or it's possible that it goes a little bit early, and this just creates a bigger flag here on the trend line. It's breaking through a little bit here, and then it's coming straight back through. That gives me the indication that it's not quite ready for that sell just yet. So give this some time, be very neutral with it. Look at this as the bigger pattern, or be neutral enough to take this as a continuation pattern here if the market does give you that indication. So with the DXY, it's very, very possible we get more selling. We just might get the completed pattern before we do that, or we get a correction here from the move down, then we see that selling. So either way, the direction, we already know the direction. The direction is to the downside. Whether we get that sell now or we go back up for another touch, we trade in this pattern. You have to take it for what it is, but we know the direction it is to the downside. So that's the DXY. Keep that very simple. Let's look at some of the pairs I'm looking at. One of the big ones is euro dollar. So let's look at the weekly chart here. It's a very similar thing, but it's the inverse, right? Euro dollar has an inverse correlation to the DXY. So if you look at it, we had an impulsive move down, more of a low test candle. Again, it's not perfect, but then we get this impulsive move to the upside, completely retraces that move. And so what it gives us is it gives us this candlestick pattern that gives us the indication that it's very possible that we see more upside out of this pattern. As a target, what I'm looking for is the high, the beginning of the pattern, similar to what we're looking for on Bitcoin, right? If we break out of this descending channel and go to the upside, I'm looking at the beginning of the pattern. Why am I looking at that? Because it's very likely if we do get there, we'll break through it, maybe come back down, then come back up. What does that give us? It gives us a continuation pattern off this impulse. This whole pattern then just becomes part of a bigger continuation. So it's important to understand that going in, understand ahead of time what you can expect, but also really stay neutral, because the DXY can give us a short-term buy and then the sell. So be very neutral with it. Jumping down here, looking at the daily chart, again, it's just a descending channel. We got that rejection here. What is interesting to me is down here on the 1 hour. What do we get from here? You can see, similar to how we started to move down and then move straight back up into the pattern out of the DXY. we're starting to get a very similar thing here. So it looks like a flag. It breaks to the upside as you would expect to happen, and it's starting to move down just slightly. So what I would see with this, couple scenarios. Is it possible that this moves back down, just gives us this ascending channel? Then we'd simply be looking at an ascending wedge, essentially, to then see this come back to the downside. Now, to see this come back to the downside does not mean we're going all the way back to the bottom outer structure. It's important to understand that we could simply see a much bigger continuation at this stage. So what that would look like is we'd move back down, then we move back up, move back down a little bit, then we get the buy. And all that would mean is we had a much bigger and more elaborate continuation pattern to the upside. So understanding that in advance, understanding that way in advance is going to give you the edge and really help you understand how you can capitalize on this if the market does give you this or that. So that is kind of what I'm looking at. I was looking at this flag before we moved to the upside. We got that move. And now it's just kind of rejecting and reversing a little bit. So the other scenario and what I would be aware of is it's possible that we move all the way to the trend line here, then get this move back up. What that gives us is a smaller version of a continuation that we're expecting, and then maybe we get a rejection here, move down, and create that bigger pattern. But it's important to keep all these scenarios in your mind. If the DXY does go back to the upside, create the bigger pattern, it's possible that this just becomes the ascending, and then we see that sell maybe just to here to create the bigger pattern. So with this, I'm being very neutral. I'm letting the market give me what it's going to give me. Tomorrow is a bank holiday in the UK, and so it's very possible that it's going to be a very slow day. Mondays are typically slower anyways, but I would be very neutral with it and let it give me what it's going to give me. So that's euro dollar. That's like the big one I'm looking at. Pound dollar is very similar. So if we look at it on the daily chart, I've been looking at this for weeks and weeks and weeks. We had this ascending channel. We broke out of it impulsively, and then we just moved in this descending channel for quite a while. We had this kind of structure here. So previously I was looking at this, and then it moved out, but we started to get the rejection off of that, started to get the move up. So I'm simply looking at that as the extension of the pattern. The pattern is still valid. It didn't change anything. It's still a descending channel. Nothing really changed. But if we look at it on a lower time frame, we had this descending channel, and it broke to the upside. Broke to the upside pretty impulsively. Now we're starting to get more of that bigger continuation pattern. So within this, I would simply look at this as the big continuation pattern. So what that means is I would be aware that it's possible at this stage to see another reaction down here before we get the actual buy. It's possible that we get a slightly more advanced, more complex pattern before we actually do get the buy. But keeping in mind that what it's looking like right now is more of a smaller move up. The market is starting to give us just a correction here on the trend line. It's not as clean and it's not perfect, but I would be aware of that. If we do get, let's say, an impulsive breakout, that it would be your indication that it's less likely to see this come back down for a third touch. So I'm looking for a buy here, but again, we may start to get a bigger pattern. And again, if Monday is more corrective, it's slower, it's possible that this simply becomes this kind of formation. We move to the downside, get a reaction here, be very interested in taking that because you'd have essentially a triple bottom 1, 2, 3. if we get any kind of rejection in that area, I'd be interested in taking that as a long. So that's pound dollar. It's quite simple. If you do take it as a long, let me cover this here. Let's say we get it here as a long, and you'll probably get in here with a 30 pip stop. It really depends on what the market does give you. But you probably get in with a 30 pip stop. It's about 1.5% there to the top. It's about 4% to the high of the pattern, just to see how it does react. And then ultimately we're looking at the outer structure for about 10%. And it's possible, if we do get more selling on the dollar, it's possible that we break and go a lot higher. It's 26.5%. It might sound crazy to you, but that is the potential. Why is that the potential? Because if we're looking at this as the impulsive break out of this pattern here, which it is, this descending channel could become part of a big continuation. So what that would look like is we move back up, maybe move back down, then we move back up and get the sell out of that pattern. All that gives us is a big continuation pattern. It's very, very likely that we do get that if we do get the break out of this descending channel. So again, understanding the market being 10 steps ahead, understanding what it can give you. So that's pound dollar. That is what I'm looking for the week ahead. And again, it may take a few days for that to materialize, but that is what I'm looking for. So I'm going to look here. I'm going to look at Aussie dollar, and then I want to take a couple suggestions from the chat, and then I want to show you back testing, and then we'll go into Q&A because I don't want to belabor this too much. So looking at Aussie dollar here on the daily chart, you can see we had this structure here. We had that structure. It then broke to the downside, but it broke to the downside very correctively. And for several months, since January, we've been trading this descending corrective channel. So let's jump straight to the 1 hour. This was quite nice as a buy, just looking at this descending channel. It's quite clear. If you didn't get involved in this, let me quickly show you what we did have for Aussie dollar. So this big corrective channel, within that we had this smaller descending channel. So we had a descending channel within a bigger descending channel. It broke to the upside out of that. Then we got this correction right here on the trend line. This was quite nice as a setup to take. That would have been my indication, simply because we have 1, 2. This would have been the third touch, but instead of rejecting, we start to get a correction right here on the trend line. Then we get the move to the upside. As we got the move to the upside, we got a continuation pattern here, very clear continuation pattern here. Then we had this type formation here, and it started to reject. This was your first indication that we're either creating a bigger pattern or the market is giving us something completely different. The reason being is we had more of this correction. We moved to the upside, completely retrace. So when that happens, if I'm in this trade, I'm at break even, because it's very possible that the market just comes back down like this and gives us a much bigger pattern. So that's what it gave us. We sold out of this, and by the way, we had this pattern here that we could have taken as a sell. A very nice sell opportunity here. Continuation pattern, more selling, and then it moved back to the upside. So with this, it's very similar to what I'm looking at for euro dollar and pound dollar. I'm just looking at the market that it's very possible that we get a bigger pattern. And what I'm ultimately asking the question is, Is it possible that we move back to here to then get the buy? Or do we just create the bigger continuation here to then get the buy? This is the stage where it is possible that we get that bigger correction, that bigger continuation pattern. Why is that? We already had a clear flag continuation to the upside, heavy momentum. If we're going to get a bigger continuation pattern, if we're going to get a more complex pattern, this is where it's very likely to get that. It's worth noting that we do have this type formation as well, as it is rejecting right there. So I do see this moving to the upside, but what I am aware of is it's very possible at this stage we get the bigger pattern. And so to take this, I would simply be looking for the market to form that pattern and then get in either at the bottom here, or depending on how big the pattern is, get in on the break of it. So I'm still looking for upside with Aussie dollar, but it's possible that it just creates a bigger pattern, a more complex pattern at this stage. So you have to be aware of that, planning for it. So watch out for a bigger continuation on Aussie dollar before you jump into a trade there. So for currencies versus stocks, the reason why we trade currencies is we found that there are a lot of variables with stocks. So the company's performance can change. You know, maybe they have a bad month, a bad year, bad run in production. Maybe they have some quality control issues. That influences the price of the stock. With currencies, as long as there is civilized world, as long as there is a civilized country, as long as there are civilized countries, I should say, currencies are going to be reliable. You're going to be able to trade them every month, every week, get reliable results. We found that the structures and the patterns play out month after month after month, and they're very, very reliable. The probability is on your side, and that's why we trade currency quite a bit. So that's Aussie dollar. I did want to look at Euro Aussie really quickly. We did get that as a question. So yeah, we did look at Bitcoin, but this will be uploaded so you can look at it later. So Aussie dollar, it's quite interesting what we did get here. Let's jump back to the daily and look at the bigger picture. It's always wise to look at the bigger picture whenever you're looking at any chart, but especially on Forex charts, because you need to understand what the market gave us before and understand current price action in context of that. So you see here, this is one big ascending channel, right? One big ascending channel. We have an ascending channel here that we broke out of impulsively. We're starting to get yet another ascending channel. So what you would expect is to see this come to the downside. And if you jump down to the 4 hour, you can start to see this a little bit more clear. You can see the impulsive move to the downside, and then just more of a corrective period for quite a while before we ultimately got the move back to the upside. And you're going to start to see a trend here. With Euro Aussie, I'm looking for the market to give us a bigger pattern, right? Because we've had such a nice run up, because we've had this flag here and this flag here, and we had this flag here, then either a reversal or a bigger pattern to trade. And so when I'm looking at this, what I'm aware of here is this pattern at the bottom. So if I'm looking at this as well, if I'm looking at this sell-off, we had an ascending channel here. If I'm looking at this sell-off, we have this descending channel. What's important to me is we're at the double bottom area essentially. So what we have is a continuation pattern, the move up, an ascending channel, it moves back down, gives us this ascending channel. It's very likely at this stage we get the move up out of this pattern. So with this, I would simply be looking for either a clear break or let the market give you a couple more hours here in a pattern right here on the trend line. I'd have my entry right here to get tagged in and take that at least to here and see how it reacts. If it reacts here and comes back to the downside, we know that this is just part of a bigger pattern, and then we'll start to get this. Maybe we'll get 1, 2, 3 here on the bottom, then get the buy. But I'm looking for a lot of more of an upside here at this point before we do come back to the downside, because ultimately if we look at it, this is all part of a bigger ascending channel. So that's what I'm looking at for Euro Aussie. Simply based on the descending channel we have right here, it's looking more like we'll get that move up at least to the double top area, and then we'll address what it does at that stage. But that's what it looks like at this stage. So you can set alerts on TradingView as far as an alert, as far as an indicator that will draw lines for you. There are some software products that do that. They're not perfect. Obviously, a human is the only one that can really make these decisions, because there are a lot of nuances with the market and it changes. What you get this week is not going to be exactly the same as what you got last week or last month or last year. Similar, and the patterns are very similar, but there are nuances that only a human can really understand. So I wouldn't put too much stock on a lot of the software out there that does draw for you. So that is some of the Forex pairs that I'm looking at. There are a couple more, but don't want to take too much time with this because I do want to show you back testing here really quickly. So if that's clear, we'll go back to Bitcoin and I'll show you how I back test and what I look at for it. I'm also going to likely drop a spreadsheet in the Slack group. If you do want to backtest and you want to use my spreadsheet that I've created, more than happy to dump that in the Slack group for you guys. So how I backtest is I look at the 1 hour chart. Now, I use the replay feature to backtest. And how the replay feature works is very simple. Click replay, you select anywhere in the chart, it moves price action back to that point. And so what this does for us is this allows us to play the market out. So in this case, if you look at what happened here, we can play the market out. We can make decisions in a live market, right? We can say, okay, I'm looking at this pattern, I'm going to put on this trade, and then you document your results. And what this does for you is it not only gives you experience, but it gives you confidence that this does work, that the probability is weighted in your favor. That is very important to have that confidence. If you don't have confidence as a trader, you're not going to be taking good trades. So we're here on the 1 hour chart. What I will do is I will go back 1 year. So I'll go back to the beginning of 2017 as a starting point, and then I'll back test to the beginning of 2018. If you want to go farther, it's up to you. That's what I do. So I'll go back and I'll look at January 1, 2017. See if TradingView will do this for me. One thing I have noticed with TradingView is the go-to feature for some reason doesn't like me. So if it doesn't work, it is what it is. You can use go-to if that works for you. That would be ideal. But if that doesn't work, you can simply scrub through the chart. It's not as fun, but it is what it is. So what I will do here is I'll go back to the beginning of 2017. So here we are. This is right around and I'll click somewhere back in here on January 1st. This gives me only price action from January 1st and back. So from here, what I do is I simply select a speed where I'm able to draw on the chart. I'm able to see the pattern and react. And once you do that, let's say, the other thing I do want to show you here is if you are at a certain point in the chart and you want to go back further, you can click this button here and go back even further, right? Does the exact same thing. So what I will do is I'll select a speed that is slow enough so that I can draw on the chart, so that I can see the pattern and set an entry. You know, it's a hypothetical entry. It's not, obviously you're not trading for real. This is historical data, but it gives you the confidence in the strategy. So what I will do is I'm going to speed this up simply to show you, but I'll watch it play out, and when it does give me an opportunity to trade, so like this as an example, I'll be looking at this pattern, right? And then I'll set an entry. So in this case, I'll jump on the risk reward tool and I'll be looking at this. If you want to be super conservative with it, you can set an entry here. Set where your stop would be, where you would place a stop if this was a live market and you were trading this. And then you simply look at your target. So for here, I'd be looking at this as a minimum, and then it could go a lot higher. So I'd simply play it out, and you see what you did. You see what kind of results you got. In this case, I would have probably gotten tagged in at this point. It moves back down, then it gives us the move to the upside. I would tag this down in a spreadsheet and really document your results. And then you get experience managing positions as well. So if you have this kind of a pattern, would you manage your position? Would you exit the position? Would you maybe lock in profit? What would you do in this situation? It's going to give you an incredible amount of clarity, I promise you. And maybe you're struggling as a trader. If you're struggling as a trader, backtesting is going to take years out of your struggle. Trust me. It's going to just click. You'll be like, okay, that's why this works. That's why the market does this. That's why these patterns work out. That's why. And you'll get an immense amount of clarity, and you'll be able to look at the market in a new light. So what I would do here, I would simply tag that trade down in a spreadsheet, look at risk reward, and then continue to move forward until I get to the beginning of 2018. Once I get to the beginning of 2018, you can go all the way to today's date, but I simply look at about a year of data on the 1 hour chart. One thing that is worth noting, you can't switch between time frames when you're in the replay. So if I try to jump to the daily chart, what's going to happen is it'll just jump me back to now. So you can't jump between time frames. Unfortunately, TradingView is working on that according to some rumors. But right now, stick to the 1 hour, go back, and then look at it. So Johnny, sometimes get confused when you talk about continuation. Would be helpful if you specify whether that continuation is to the up or the downside. It's a good question. When we're talking about continuation, it is always in context, right? So it should always be understood in the light of what happened before. If we have an impulse to the downside, we're looking for a continuation to the downside. If we have an impulse to the upside, we're looking for a continuation to the upside. If we have an impulse to the downside, let's say this as an example, you wouldn't be expecting this as an ascending channel to then just move to the upside, right? You'd expect that to continue the move to the downside. And so whenever we're talking about continuation, it's always in the context of what happened before. An impulse to the downside, we'd expect continuation to the downside. An impulse to the upside, we'd expect continuation to the upside. How long should you wait before entering a position after, say, it breaks the upper resistance line on a symmetrical triangle? If it breaks impulsively, and let's say price is way above the trend line, and it breaks like super impulsively, I wouldn't just jump in on a trade simply because it's broken. If I didn't catch the trade and I didn't have my entry set, let's say we had I'll give you an example here. Say we had a move up and then just a tight flag here on the top, let's say the resistance line, and then it breaks. If I didn't have my entry set here and price moves up to here in the hour and then closes, I wouldn't jump in here. Reason being is here, it's a lot more risky than entering here, because after this hour closes, you could get tagged into the trade and then maybe it just moves back down, right? If you enter here, you're able to get that to at least break even. So your trade is already in profit. You can set your stop back to break even. So if it does move back down, you're taken out for no loss, and you can reassess and see what the market gives you. But that's how I would manage that. If you see an entry, take it. But if it does impulse out and then it's way above or way below, I wouldn't just jump in on it simply because it's broken. So that's how I'd manage that. So that is kind of what I wanted to cover here. That's Bitcoin, that's some Forex pairs. That's how we handle backtesting. I hope that was clear. If there's any questions on that, I'd be happy to answer anything like that. But we'll go into more of a Q&A here for a few minutes, then we'll wrap this up. And so if you have any questions, feel free to drop that in the chat. I'll do my best to answer what we have. Mr. B, so higher time frame is always going to take precedence. So if you see something on the higher time frame and it is very clear, everything else down to the hourly has to be understood in that context. So in this case, if you see an inverted head and shoulders, I'd be more likely to see that as the patterns themselves instead of the head and shoulder. Head and shoulders is a very high probability pattern, but it's one that we can apply to a lot of different scenarios. But definitely look at higher time frames in context. So see what the higher time frame is doing, jump down to the 1 hour, look at what you can see just based on what the higher time frame is doing, what you can enter. If the higher time frame is looking like we're going to see the sell, then understand that any buys may be short term. So definitely keep that in mind. So basic idea of what is covered in your course, how many hours of content there is. I'm not exactly sure how many hours of content there is. We've never actually counted it. I know there are, each lesson is between 15 minutes and 45 minutes long. So there are hours of content. I would say it's 15 hours or better at this stage, but I don't have an exact figure. But as far as what is covered, we talk about the strategy we trade on a daily basis in depth. So we look at the nature of price action, how you can understand what price is doing in, let's say, a pattern like this. Most people see a pattern like this as simply range trading. But what we show you in our strategy helps you understand how to capitalize on this entire pattern, how to see it for what it is, and how to anticipate what happens next. That is kind of the core of it. With a lot of different strategies, you'll have maybe support and resistance lines. Maybe you'll have some Fibonacci levels, some RSI, MACD, whatever. You'll have all these different scenarios. But what you'll find is that you're always left kind of foggy about what the market could do. You're always left kind of unsure about what could happen next. And how we teach and the strategy we use on a daily basis helps you see the market for what it truly is. It's a very simple strategy, but it's very, very powerful. So what we show you is how the market does run, the structure and the patterns that the market has followed since day one, that you can test us on this, and then how to capitalize on those patterns, how we look at it, how you can anticipate a pattern forming, how you can get in on these patterns, and then we go into a lot more depth. So it's the strategy that we've shown here on the channel, but just in a lot more depth, really showcasing how we do trade. And it goes from 0 to 100, essentially, taking you from a complete novice to a very good understanding of the market. So that's what we're teaching in the course at this stage. Monthly EMA, until we break that, then you should be concerned. I actually haven't looked at the EMAs in quite a while. So any other questions based on maybe Bitcoin or maybe Forex or anything else that you guys are unclear about? Want to buy but don't want to miss the train this time? I wouldn't buy simply to buy. I would definitely base that on a solid technical decision that you've made based on the chart. It's a good question, Francisco. Do you trade emerging countries' currencies? So a lot of the minor currencies we don't trade. So Swiss is an example. We do trade Swiss pairs, but it's occasionally. If we have a very, very nice setup on a Swiss pair, we'll trade it. But most of the time, we're looking at a select few. So we're looking at, for me, I've cut my list down quite a bit, between 12 and 15 currency pairs. Now, I'll look at all 28 most of the time, most every week, but it's between 12 and 15 that I really focus on, that I'll really trade. The emerging countries and a lot of the minor currencies are going to be very, very volatile and not as reliable. So euro dollar, very, very reliable. Dollar CAD, very, very reliable. But, you know, Swiss pound or whatever, it may not be as reliable. Or maybe the Mexican currencies or Argentinian currencies, they may not be as reliable. So we do focus on the major ones quite a bit. Stochastic RSI. If you're going to use RSI, what I will use most of the time is simply the relative strength index. I do look at stochastics if you're going to look at RSI, but it's not a huge part of my TA by a long shot, and most of the time I'll never even look at it. So again, it's one of those indicators where you can get sentiment, you can determine sentiment from it in some cases, but it's not going to help you make an entry better. It's not going to help you be more accurate as a trader. Bitcoin Cash. Bitcoin Cash is going to be very similar to what's going on with Bitcoin. If we have a few minutes, we can look at that though. Pound dollar is very reliable because the pound is a very major currency and the dollar is obviously a very major currency. So the two together, very, very reliable. Pound dollar is actually one of my favorite pairs to trade. Log versus linear. That's a big debate. And if I just turn on log here, you can see that not much changed, right? So my trend line's a little bit off. We're still looking at the same thing. This is a descending channel. This is an ascending channel. This is a move down. This is simply a correction, a bear flag continuation. Very, very similar. If you're trading this way, it's not going to change it that much. But the majority of the time, and pretty much all the time, I'm looking at linear. Log is interesting and it's useful for research, but trading, linear most of the time, if not all the time. Fibonacci. So Fibonacci I will use as targets. So I'll look at it to give me price targets, but most of the time I won't even use it for that, simply because 99% of the time the chart and the pattern is going to give me all the information I need. But if there ever was a case where maybe it's not super clear, you know, a Fibonacci can give you some price targets to look at. So I will use them for price targets, not necessarily for trade entries. I will look at the pattern for the trade entry and then maybe a Fibonacci for managing that if we do get a reaction at one of the levels. So because it is a mathematical thing and it does make sense, but I won't use that for trading, for trade entries. So we'll go a few more minutes here with the Q&A if there's any other questions. And then we'll wrap it up here. Try and keep it about an hour 45, just under 2 hours here. It's definitely looking like a bear flag. That is for sure. And it's getting clearer and clearer. Hey, no problem. We enjoy doing these streams. A lot of you are getting a ton of value out of it, so we enjoy helping you see the market the way we see it, and hopefully that'll give you some ideas for how you can actually see this for yourself. Do you have any positions that you just hold in Forex or crypto? You talking crypto for altcoins? For altcoins, there's a couple that we are holding. Most of them we have sold, and that is simply because I'm not going to hold a coin and let it drop and lose 80% of its value. If I can look at the chart and say, okay, just technically we're looking for a sell on that chart, I'll sell because I can get back in, buy more at a better time, and it just makes sense. But yeah, there are a couple that we do hold, but we have sold quite a bit. Perfect, Mr. B. And that happens. The more your skill set improves, the clearer this becomes, and you'll look back and you'll see just how much you've progressed. And it's just phenomenal just how amazing and clear it does get if you do put in the time and effort. That's awesome to hear. You're welcome, man.
Adam's question.
So how can you know what a sensible stop loss would be for Nano? Yeah, that is a good question. If you're looking at something that is just going crazy and it's moving up like crazy, the only time I would enter a trade like that, I wouldn't just jump in on a parabolic movement, for example, mid-move. So in this case, I wouldn't just jump in mid-candle, right? I'd be looking for the market to give us some sort of a correction. So in the case of Nano, let me go to Nano quickly, show you what I'm talking about. It'll make more sense. So in the case here of Nano, we did have an opportunity to get in on this trade. So this here was a very, very nice continuation pattern to the upside. We have a move to the upside. We'd be expecting continuation to the upside. If you were taking this, a couple ways you could have taken this. One way would have been to take it here on the retrace candle, because we know this is the corrective period based on the price action. You see the impulse down. It retraces, you could take it here. Obviously your stop is going to be better. You'd be less likely to take that trade unless, you know, you were more advanced as a trader. But if you're taking it as the break of this pattern, I'd be looking at a stop quite a bit lower. And the problem with that is your stop becomes quite large. Your risk to reward doesn't become as great. So you can see there's about 2% all the way to the top if you manage it at the top. Getting in here at the retrace candle, which is slightly more advanced, there's a little bit more in there, it's about 3%. But to enter a trade like this, I'd only be looking to enter with a pattern like this or a pattern like this. See, that was a nice continuation pattern. Even this pattern here was nice. That was a lot tighter. You can get a much better stop on this pattern. So you look at it, it's about, have a stop there. You can look at the entire run for about 10%. So it depends on what the pattern gives you, but you have a continuation here, and a continuation here at this stage. It's much more likely we get a bigger pattern, or it just reverses from here and the market will show us that. But as far as stops, it's really dependent on the pattern. But I'd simply be looking at, if you're looking at the break, a stop below the pattern. If you can get in at the bottom of the pattern, obviously that's better because you're able to have a much smaller stop. So that's how I'd be looking to manage that to get in on the trade. I wouldn't just jump in based on a move to the upside, just because they're green candles, for example. It is like learning a new language, and a lot of people give up before they get to a fluent stage. You have to really stick with it. Because I've been there. Learning how to trade, there was times when I considered quitting. I considered if it's even worth it. But I'm glad I stuck with it. I'm glad that I put in the effort because now it's crystal clear. Now it makes total sense. And that's going to happen if you put in the time. It's going to become autopilot. It's going to be crystal clear. That's what you're looking for. If you're able to, if you're in a trade on Nano and you're in profit, definitely lock in profit. Don't just leave it open. Definitely lock in profit. Are there any more questions here before we wrap this up? Guess that's a good sign that there aren't a ton of questions. Apparently it was clear. Well, if there's no more questions, it's been great hanging out with you guys here this evening. It's been good to go over some pairs. Hopefully it makes sense to you guys and you're able to capitalize for the week ahead. If you do have a question, feel free to comment on this video when it does go live. If you're in the Slack, definitely leave a question in the Slack. We're happy to answer those questions. Now time to practice. Absolutely, man. Practice as much as possible. I still backtest myself. And there's pairs that I've backtested, but it never hurts to go back over it. And now I'm looking at different things. I'm looking at nuances. I'm looking at very specific details. But definitely do as much practice as you can. All right, guys. I'm going to call it here. Thanks for hanging out with us. Thanks for sticking with us. I appreciate your support. We do appreciate everybody that's been here, everybody that watches the videos, everybody that's in the course, everybody that's in the community. We genuinely appreciate it. If you've been with us since we started in January, absolutely appreciate that. So thank you. And if we can do anything to help you, if we can do anything to make your journey easier learning to trade, let us know. If you are interested in learning how to trade, click the link in the description. We do have a course on that teaches our strategy. So if you're interested in that, feel free to click the link in the description. But that's going to do it for this live stream, guys. Thanks for watching. Take care now.